Hey everyone, how's it going? It is I, the real Randy Chavez, coming at you today with Jordan Riz and Bumper co-founder Jonathan DeFi De Carteret. Everyone say hello to Dashi.
Woo, hey Dashi.
So Jordan,
Hey,
Jonathan,
Dash.
how you guys doing?
Yeah, good. Pumped.
Feeling awesome. Really excited to have this interview. I just caught Jonathan and Crypto Rain earlier today. And so it's going to be awesome to be able to speak directly to you, Jonathan.
Yeah, great. Yeah, I'm super interested to get into it.
Yeah. So before this, you have done a plethora of things. I think one of the things on that you sent us in the informational bio, saying that you had a 120 foot yacht. And how did you go about making wealth before this? How did you go about becoming a successful entrepreneur before this, leading up to it?
Yeah, well, for some reason I started businesses when I was 12 years old. However high you are when you're 12, and just in my life I've always started and then exited businesses in just a raft of different arenas. And I kind of found myself moving more from the creative industry, where I had an advertising agency at one point, and a direct marketing aggregator, which I grew to the UK's 60th fastest growing company. But then I kind of started to gravitate more towards the world of fintech, because just quite interested in how finance works, and that just seemed a very closed box. The finance world like to keep it within themselves, don't they? And I kind of was quite interested in how I could disrupt that. And then when Bitcoin came on my radar, which was quite early, I think about 2012, 2013. It was just my jam. Satoshi's paper just spoke to me. I just got exactly what he was doing. I understood the technology. I could see where it was all going. And and so I kind of went committed to that fully. And then I think and I often think about this, I don't know if you guys share the same sentiment, that when Vitalik kind of launched the white paper for Ethereum, do you think Satoshi was like, oh, yes, of course, that's what you do. Of course you lay a smart contract on top of it. That just closes the circle, doesn't it? Then you could do a whole revolution of things on top of that. And so I think when I saw the Ethereum white paper, I saw the future of finance, like how it's going to be. And I'm a radical believer that DeFi will absolutely outstrip traditional finance, and perhaps we can get in that later. And so I suppose my kind of wealth just kind of came from starting and exiting these businesses, and then really doubling down on crypto at an early stage. And what an interesting environment, what an interesting kind of collection of people that exist in DeFi, and for someone who's built a protocol which I think is right on the edge of what blockchain can do. There are so many smart, talented people in this space, even in bear markets. It seems to attract even more smarter people. And so that's kind of my kind of potted history that led me from 12 years old to where we are.
I have a quick question about that, Jonathan. Did you end up mining any cryptocurrencies back when it started?
I did, but it was only on my desktop, so I wasn't really kind of accumulating. I wasn't the pizza guy with kind of hundreds of thousands. But yeah, I was more just interested, first of all, in trading, and then almost acting like a kind of armchair venture capitalist in selecting ICOs, and then realizing that there were some ideas I wanted to do that no one else was.
Awesome.
So I guess Jordan will go back and forth with a couple of this stuff. I'll go one, you go one, and then John, if any questions for us, by all means, feel free to interrupt us. So when talking about being a serial entrepreneur, going from one thing to the other, and seeing your vision, knowing where these things are going to go, what's your vetting process for hiring people? I know you said it takes a lot of smart people to do this. You hired a lot of smart people. I imagine after so many successes, you kind of had to pick the litter. How do you go and decide who to trust? How do you go and do that?
Yeah, that's a really good question. It's something I personally have got much better at as my career has gone on. So at the beginning, it was, to be honest, I had some luck. Just happened to have some people come through the door who were just really good, and you can tell when someone's really good immediately. They have ownership. They want to get involved in things they haven't been asked to do, and there's a real sign there of kind of commitment and intelligence, and the ability to be able to do lots of different things. And you can tell when someone is very pigeonholed, just treats their 9 to 5 as a 9 to 5, and in a startup that just doesn't work very well. But at Bumper, we went through this period probably about a year and a half ago where we just had a succession of people we seemed really good in interview, got them on board, and within a week or a month, you could just tell they were just not cutting the mustard, either in commitment levels or in their kind of levels of intellectual combustion that are required. And so we went, you go through the process of working with different recruitment companies and trying to kind of, improve that kind of that filter process. And I think at one point my business partner turned around to me and said, look, we've just got to stop, have a reset and rethink this whole process. And which we did. And we worked with a totally different agency that don't just come in and just parachute people in. They come in as an internal recruitment. So you pay them a retainer fee. They're there in daily meetings every day. They're with you through the journey. And they started to help us shape the interview process and the psychometric testing, the technical testing we ask people to go through. And actually the psychometric testing is probably the most valuable tool that we have. It's kind of it gives you an indication of what type of character the person is. And so we're able to say very, very quickly, we don't think you're going to fit very well within Bumper. But it also is a tool that we use ongoing. So, we do it every 6 weeks with our team. So we can tell when one of our core team members is starting to feel a little bit overwhelmed, a bit kind of underperforming, maybe a bit kind of depressed with, just maybe life or work. And so we can kind of come in and scoop that up and deal with it at the cause, kneel that problem out before it kind of becomes a bigger issue. And what we've arrived at now is an excellent core team. I said to the team last night before we launched Bumper, I'm so proud and privileged to be working with each one of you. They are just exceptional in their individual domains. And when they come together and, you kind of see people handing over tasks just in time, it's a beautiful thing to see. So I think we got there, but it took us a couple of years.
Happens.
Awesome. And so you're live today, and how are you finding the live mainnet so far?
A massive relief, first of all. So, to put it into context, we've been at this for 3 years, from the original concept to delivery here. And in that process, we've gone through 3 first-class Solidity development houses that just couldn't do it because what we're trying to do is so difficult. And they all start off by saying, yeah, it's fine. Yeah, we get it. Yeah, we can do this. It's no problem. And they kind of got halfway through and they're like, we just can't, whether it's the weighted average or the ratios or the keeper bots, all these kind of very kind of frontier technology pieces that we need to make Bumper work. And then, so to find the developer Digital Mob, who was the one that got it over the line. And these guys worked on MakerDAO, Filecoin, Gnosis. They wrote Gnosis. They wrote Barnbridge. They are extremely smart. I think for the first time, the core team had someone who we were working with who spoke our language, and we're like, yeah, we get that. What about this? Have you tried this? And we kind of got there. But the thing about starting a business, and especially one that is as a moonshot as Bumper is, there is no guarantee of success. You don't know that at the beginning, and you hit 1,000 walls. We think this might be it. This might be the existential problem that we can't get over, and we're going to have to just stop and maybe pivot to something else, or kind of call it a day. So to get to this point where about 5-6 hours ago, the contracts were deployed, the first initialization funds were put into the protocol, and you've got to imagine it's almost like a car engine you built, a combustion engine, and you don't know if it's going to work, and then you pour in some petrol and you fire it up, and you hope that the pistons all start to kind of work in the way that you expect it would. And that's what happened 6 hours ago. So we are just over the moon that first kind of ignition spark and the machine coming into life has kind of come true.
So is the next test, actually I know Randy was going to go next, but is the next test going to be like if the crypto market dumps, how does it all perform? Is that what you guys have to wait for?
To a degree. I mean, ordinarily, yes, right? So we call it the trilemma, right? So the protocol it's got 3 jobs it's got to do, right? It can't screw up on these. So the first one is it's got to charge the lowest possible premium to people who are protecting their assets, right? So that's one job. The other job is people on the other side who are providing USDC liquidity providers to the protocol. The protocol job is to give them the highest amount of yield it can possibly do, right? And then the other part of the trilemma is the protocol itself has to remain solvent under all price conditions and all volatility conditions, right? So that's quite hard to, it's like a spinning top. It's got to kind of make sure that it kind of keeps those three plates kind of in the air. Now, one of the things that we did at the beginning, and I'm so glad that I was convinced of this by my CTO, was that with such a complex protocol, right? And I can't overemphasize that enough, right? This in terms of the people who worked under this is more complex than Aave, right? Which is regarded as one of the largest code base pieces. This is more complex than that. Is we took the decision to invest in a agent-based model, which is an extremely high fidelity simulation that models the bumper protocol. You do this before the code writing. To me, it was a bit bizarre. I was like, well, we have to write some code for the code. We've got to write some code to model the code. I mean, it sounds ridiculous, doesn't it? But what that does is it enabled us to, first of all, perfect the design of bumper. It gave all the implementation, again, it steered the implementation of how you take your design and then you work out how you launch that on the blockchain. And for those who don't know, writing code that works on the blockchain is really, really hard. It's really hard. I mean, you got to execute a transaction just to update it. I mean, that issue is massive compared to just normal code you have to write. And then you can do loads of really cool things. So if you imagine in bumper, we have about 250 different parameters. So imagine about 250 different levers you can pull and dials you can twiddle on this machine. And one of the problems you have is how do you set all those parameters, right? And so you kind of, if you're not guided, you do it a little bit intuitively, right? You try and kind of figure that out. We're next level on that. We've got a sim where we can run what's called a parameter sweep, where it runs through all the permutations and computations of all those parameters and goes, boop, these settings are the optimum ones that you need to give you that trilemma perfection. And so we're able to do that. I think it was about two days before the protocol was launched. We were able to do the parameter sweep and just give that to the coders, and they were just like, wow, this is next level. We don't even have to, kind of run tests on this. But to answer your question, what the sim does is we built the smart contracts eventually, right? You run price feeds through that and you put that on a graph, and you do the same thing with the simulation, and then you overlay the two graphs and they are perfectly correlated, like perfectly highly correlated. So what that means is we know that when the protocol faces a black swan event, we've modeled thousands of them in the sim. We know categorically, scientifically, mathematically, statistically, it will deal with that extremely well. It is extremely robust under price volatility measures. So to answer your question, that's one problem that doesn't keep me up at night. I'm not concerned about the protocol during those pressure points.
Awesome.
So for this, what are the major advantages of this versus, just the normal stop losses? Like, what are this versus and can you use it, like, for people that aren't using the normal stuff, they're like a step ahead and they're using quants. Is this user friendly?
Yeah, so let's look at the volatility problem, right? I mean, as I said to my CTO the other week, volatility is like this vicious mistress. It's such a beautiful problem to try to solve for, right? And it's probably the biggest problem in any market. So if you look at traditional finance, right, you think about what instruments they have to thwart and deal with volatility, right? And there's two games that you've got, right? One is the good old stop loss. So you set a price, an automatic price that you're going to sell out if the market kind of crashes, right? Now, the problem with that, and I've been caught out by this, and I'm sure you guys have, is sometimes you go to sleep at night, the price just dips just below your stop loss, triggers that, you get sold out, and then literally a couple of minutes later, it just pumps back up and maybe go even higher, right? And you're out of the game now. You've lost that potential rise. So there are problems with the stop loss. Although, let's be fair, it's free, right? It's simple, it's easy, it's a good backup, but it is imperfect. And I think just it doesn't work particularly well with crypto because of the volatile nature of crypto, right? It's susceptible to getting winked out. So the other instrument is this thing called options, right? Which that's the thing that kind of got me into kind of building Bumper, because I looked at this option thing, I tried to get my head around it, right? And so the story is, you go back to 1973, right? You got these two young gun university professors at Princeton called Fisher Black and Myron Scholes, right? And they collaborate together and they work out and publish this paper which contained their formula, the Black-Scholes formula, right? Which basically calculates the price that you would charge if you wanted to protect someone for a month. So if you say, I want to protect the price of gold or Bitcoin for a month, and I want to protect it at this price, you plug that into the formula and it will kind of say, and you also put in the historical volatility of that asset, but it will kind of give you a steer on how you price that option. It gives you like the baseline. And then what you do is you put your margin on top of that, and that's how options are calculated, right? Massively successful. They won the Nobel Prize for economics. The options market is today worth about $13 trillion, so much bigger than the stock market, bizarrely. And that's the thing that we're trying to beat, because what I realized is that traditional finance, as I said at the beginning, I think it's on its way out. And I'm a futurist, and I've been right time and time again. If you fast forward 10, 20 years, you're telling me that crypto is not going to be the dominant financial world that we all live in, where money's programmable and you can write software that treats how it's kind of moved around, and liquidity is electrified and it has low latency and has pooled liquidity and all these things. I mean, clearly that's where the future of finance is heading, right? So my view was, can we build, and the other thing is options doesn't work terribly well to being put on chain, right? So if you use kind of an on-chain DeFi protocol, they're much more expensive than something like Deribit, right? And they're a bit clunky and it's slow and all the rest of it. So we tried to think, is there a better way to deal with this volatility problem than the Black-Scholes options contract? Something that is natively DeFi, and let's kind of concentrate on that. And so that kind of led our thinking on trying to kind of build an equation, which we did, and the equation is in the simulation report. If anyone wants to download that from our website, you can see the Bumper equation and how that works. And it is categorically 30% cheaper than Black-Scholes option desks, hands down.
Awesome.
Thank you for the response, Jordan. Next question.
Yeah. So I have some technical questions because I'm more of a technical guy. I've done a little bit of programming and website design and graphic design, and I used to mine Bitcoin back in the day and Ethereum as well.
Cool. So
I want to know, like, do you have to have special servers that are, I guess, cloud-based, that are extremely high, low ping, I should say, to be able to keep up with, like, if the markets do go down? Like, how does that sort of part of the protocol work?
Yeah, that was an option open to us at the beginning. So what you can do with blockchain protocols is you can take some of the computation off chain and run that on, say, an Azure AWS server, right? And run some really fast computations. We decided to go down the decentralized route, right? Because that was really important. So we don't do that. And actually the protocol doesn't necessarily require that. So the very basic concept of Bumper, and this is how I explained it to VCs when we raised $20 million in R&D capital, right? And even they didn't get it, right? And they're the smartest people in town, right? But to dumb it down for them, we basically said, if you protect, say, one Ethereum, and say one Ethereum is $100, right? Then and you protect it at, say, $95, right? So Ethereum's $100, you're protecting it at 95. If the price comes down and hits that 95 mark, then we trade you out from Ethereum to stablecoin, right? So if it goes down and then you want to cash out a week later, well, then you're going to get that $95 that we've cashed out for you, right? If it goes back up again, though, we then swap you back into Ethereum, right? That's the very basic principle of what Bumper is doing under the hood, right? Obviously, if you followed that very childlike, simplistic model, it doesn't work, right? We modeled that obviously at the beginning in kind of hourly, minute, tick data, because if the asset is oscillating along that $95 strike price, right, you're going to get traded in and out. You're going to get hit with slippage costs, gas costs, transaction costs. And you're just going to erode the thing you're trying to protect, right? And it gets really nasty. So what my CTO realized is that we're not trying to solve for volatility, we're trying to solve for slippage. And so what we've done there is have a combination of you deal with it in the aggregate, you deal with the things in the pool. So what the bumper protocol is it's got a pool of Ethereum on one side, right? Lots of people putting in positions all at different floors, right? And on the other side, it's got USDC pool. And in the middle two, and it's getting a price feed from various oracles, and it's monitoring a series of ratios. And if one of those ratios red lines, then it commits a trade of a certain amount of Ethereum for USDC or a certain amount of USDC back for Ethereum. So the protocol is constantly on a seesaw, kind of balancing itself. And because it does it on the aggregate, and because it does it via kind of ratios, it doesn't need to kind of react in that really fast tick data kind of way that perhaps a quant would in traditional finances. We don't need to do it in that way.
Oh, that makes sense to me. But so that's because you trade your Ethereum into bumper Ethereum. That's sort of how it works. Is that right?
No. Well, the protocol will have Ethereum, and it will just if it needs to trade out and rebalance, it will just trade for USDC. So it's constantly kind of rebalancing like that. But because you're doing it on the aggregate with lots of different, big trades, then your slippage and your gas costs and your transaction fees for each is much less proportionally to the individual positions that are in there. But we should get onto the bumpered ETH after, maybe in a follow-on question, because that's the cool bit.
So yeah, that was really good. Out of curiosity, for the recent downfalls the last couple of years of Terra Virtua, FTX, things like that, what happens if USDC goes down? What if it depegs? And do you have another thing
that is a problem? Yeah, that is a problem. I mean, there are various assumptions you've got to make in a protocol, right? And one is that a stable coin is a stable coin. And I think if we saw that, didn't we, with USDC, right? With the bank collapses, and there were some USDC holdings, I think, in Silvergate, and you saw it kind of depeg to 93 cents, I think it went down to, before Biden kind of banked out the banks, and it kind of came back up. So where you have a systemic issue like that, we're all screwed in that regard, right? You know, if the world's biggest stable coin starts to fail, well then you've got nothing to hedge against.
Okay, so we gotta hope. All right. Yeah. Not a prayer. Call me Bon Jovi. All right, that was my question. Jordan, yours?
Yeah, so that's really, really interesting. I'm just thinking a lot about it.
Can I explain about the bumpered ETH thing? Because I think that's the really cool thing.
Oh yeah.
All right. So if you're a user of Bumper, you got some ETH, right? So you got 10 ETH. You send it to the protocol. You set the floor you want to protect. You want to protect it for a month or whatever, and then you then send your Ethereum to the actual protocol, right? Now the protocol then is balancing that, it's protecting that, and it will always redeem you at the price that floor price you've protected. Okay, it will stand by that. What it returns back to you is bumpered ETH.
Yeah.
So BETH. Now what that is, this is cool. Now this is where we consider ourselves DeFi 3.0, because we are now adjusting and changing the very properties of a cryptocurrency asset. Because what you have in bumpered ETH is the downside volatility has now been removed. So your bumpered ETH will never go below the price you've set on your floor, yet it will follow the price of Ethereum up if it rises. Now you can use that to open up a collateralized debt position on, say, Maker or Compound or Aave. You could use it for a leverage long position, a leverage short position. You will never be liquidated, because you're paying a premium for Bumper to remove the downside volatility. So it will never go below a point where you can be liquidated out.
And you could always trade it for that?
Yes. Yeah. So that is the game changer.
So it's like the same thing as shorting, but just with the guarantee that, obviously when you short, the risk is it goes up, you get squeezed out of that. You have to either forced to buy more. But with this, you're saying that it does. If it goes down, cool, you still have this value that you can trade for, right, sell it, and then buy. But if it goes up, because it follows the price, so essentially you can't lose.
You can't lose, but you are paying a premium to Bumper. So that's the trade-off.
You can lose your premium. That's about it. So it's limited. limited
Yes.
to what you can lose.
That's
Yeah.
right. Yeah, you're paying the premium, but we'll put that into context. The 30% cheaper than Black-Scholes option pricing, right? So there's a hefty discount there. And the other thing is with Bumper is that if your asset you're protecting, if the price moves away from your floor, your premiums go down as it moves away from the floor because it's putting less pressure on the protocol. So the premiums can be nominal if you're kind of really above your floor price.
I do remember the question I had. It was which tokens do you support, or are you going to keep adding more and more tokens in the future?
Yeah. So I mean, it's taken us this kind of monumental effort to get to launch, and we've just focused on Ethereum, right? So that's now operational now, right? People can use the protocol now.
Well, we're going to talk to you about OMI and why you should incorporate that in your protocol.
That's on our radar. Yeah, 100%.
Oh, really?
Yeah.
Bumper OMI.
Yeah. I mean, that's just a game changer, isn't it? You kind of got the Federal Reserve of DeFi kind of bumpered. So the strategy for us, right? You just go through the top 10 biggest market cap tokens that aren't stable coins, and you just pick them off one at a time, and you just run it in the sim to kind of see what parameters we need to kind of set the protocol to, and then you just open up those pools. So that's going to be coming next. We'll probably start with wrapped Bitcoin just because it feels like that should be the next cryptocurrency to add to it. And
we'll give you that one.
Yeah.
Awesome. That's exciting.
So for this, with our many conversations with Crypto Rain about this is one of those things that, and again, this kind of his words, or maybe I'm putting words in his mouth, but saying that this is one of the tokens, because of how low of a market cap it is, that it could outperform OMI. So my question to you is, using mosaic theory, what do you think would be the most important piece of information when determining the value of Bumper?
Yeah, that's a good question. People often talk about, don't they, the utility of the native token. So we designed the protocol and the tokenomics with a great deal of consideration and carefulness. So the bump token fulfills a number of purposes, right, which are tied to the protocol. So one is that when you want to use the protocol, you have to bond bump tokens. So that means if you want to protect something worth $100, you need to have 2.5% of that, so $2.50 worth of bump that you deposit as a bond while you're protecting your asset, and then you get that back. Now, what that mechanism does is it ties the users to the protocol to a network effect. So that's really an important facet. We also use the bump token for governance in the protocol. So if you want to obviously kind of get involved in the DAO and have that voting power. And we also use the bump token to incentivize users. So remember before I talked about this kind of balancing mechanism the protocol is doing, right? So one of the many things the protocol does is, let's say you've got too many takers, not enough makers. So too many takers, not enough makers. So what the protocol does then, it would increase the yield for makers to kind of bring them in. So they're kind of getting a bigger kind of sustainable yield, right? The other thing that we do is we distribute bump tokens to all users of the protocol. In fact, for the opening period, we've got $250,000 worth of bump tokens that's going to be distributed to early adopters of the protocol.
Yeah.
So
you have, I mean, my first question, well, originally it was going to be like, hey, what are you going to do with the other 200 million or so of the token that's still yet to be released? But now I'm thinking, are you guys going to have enough if everyone's, like, if this gets mass adopted, do you think that's going to be enough for everyone to go and use?
Yeah, I mean, I think the protocol has, I can't remember the latest tokenomics, but there's the lion's share of the bump tokens is owned by the protocol, right? And so it will distribute those out, but it's done on a curve. So as the TVL goes up, then it distributes less of those tokens, right? But to go back to your question, if you know, how do you kind of gauge the value of bump, the native token? It's a combination of all those things combined with the TVL of the protocol. And I think as we see the TVL go up, the number of token makers go up, they're all bonding, there's greater people kind of voting, then I think that's going to be the real driver of the bump token price. And we've done that for a reason, because what we realized is that we're the first ones to crack this. Okay, we know there are other companies behind us who are taking a very similar route to us in how they kind of come up with an alternative to Black-Scholes option pricing that takes this kind of route. And the way we've designed Bumper is it's a little bit like a kind of walled garden, right? So the higher the TBL and the higher the bump token price, then by design, the protocol becomes more robust to volatility, and it becomes cheaper for the users who are protecting or making from it. So this is a land grab, and that land grab is powered by the bump token and TBL. So they're the main metrics that we're going to be focusing on.
Yeah, I already have quite a bag of bump. It's my 6th or 7th biggest token of my portfolio.
Yeah, right. And
it's
Crypto Rain.
Rain.
Rain is older, smarter, and more experienced than both me and Jordan, and he loves this very, very much.
Yeah, cool.
And he's usually not wrong. Like, he's almost annoyingly right in many of these things. Early adopter things like Axie Infinity. So typically, whenever and I promise Jordan this will be my last question before you. I feel like I'm monopolizing this. Typically, when you have, whether it's political arguments, whether it's just an argument for fun or nerd stuff like Star Wars, whoever's like a big star, whoever's really smart, and they're on your side, they're in your camp. You always want to highlight them. Who is some of the most influential people that are currently on board that either have some tokens or have helped with this that you want to highlight? Like, oh, hey, this person's in our camp.
I don't think there's a huge amount of them. I don't think there's a huge amount. I think the complexity of it, that not a lot of people have managed to get their heads around it, to be perfectly frank, right? So, I was talking. Yeah. Well, we're kind of lonely pioneers, out on our own.
You explained it really, really well. I fully understood what you said with the balancing inside the contract. It makes sense to me, and that way you don't need to rely on servers. It's just about how it works.
I think the issue is when you dig under that simple explanation, it becomes bewilderingly complex. I mean, you got to understand we have on staff university professors, postgrads, data modelers, the Swiss Centre for Crypto Economics, and they all say this has been the hardest problem they've ever tried to solve in their career. Right? It's really, really hard. So what we're hoping is that when we gain traction, and the traction will come from the fact this thing works so efficiently, right? That once we gain traction, people will then start digging into the white paper. People will start digging into the simulation report, and the and those kind of intelligent, famous people in the market, we hope will then start saying, you guys need to be looking at Bumper. Much like I think people started to do with synthetics, which I thought synthetics was a couple of years ahead of its time, right? But when that came out, I think people were like, you need to understand how this thing works because it's beautiful and it's really smart. And so if we can be in that same camp, then we're in good company.
Yeah, and I saw you have your first exchange listing on August the 17th. It was Bitmart.
Yeah, that's right. Yeah.
Let's talk exchanges. Are you guys planning to roll out some more exchanges during the bull run, or?
Well, it's really fun, isn't it? Trying to get yourself listed on exchanges.
Yeah.
I've noticed with not just Omi, with Grumpy Cat and 4chan, and it's very interesting. And they're like, oh, we'll waive your listing fees, but you have to give us like $20,000 of your token. It's like, well, we might as well just pay the listing fee at that point.
Yeah, exactly. I mean, it's just when you're running a protocol like this. I mean, this is by far the most complex business I've ever run in my life. Right, so many moving parts, and you know, I think I've got a handle on all the issues now. I think, but the listing thing is tricky, right? So you got to, for the exchanges, you can't just go straight in on the Binance, right? They're just not interested. You got to kind of work your way up. So there are kind of 3 tiers to exchanges that will kind of get you to that kind of Binance level. So we're at a tier 3, right? It's Bitmart, it's a decent, honest exchange. We've got our foothold there. We have appointed a market maker, which is a company that comes in to try to facilitate liquidity to help people kind of trade, to kind of fill up that order book a little bit more, and kind of manage that liquidity. And then the gambit is that as people use Bumper, they've got to buy Bump to bond it from the protocol, that they will then start buying it more from Bitmart. They will start buying it more from Uniswap version 3 and version 2, where we have pairs on there. And we're in contact with tier 2 exchanges, and they're kind of looking at us, and we're kind of looking at our numbers, because they want to see the number of wallets that hold Bump. They want to see the trading volume, and obviously they want to see the token price start to kind of increase. So as soon as we start to gain traction, we will apply to a solid tier 2, and then hopefully kind of shoot for a solid tier 1 by the end of the year.
I think as people, because I know you were on Rain's channel before, as Jordan says, as people look and they say, okay, Rain, that had covered Cardano early on, got in a bunch of these things early on. He covered it. We're covering it with our audiences. And even if they don't understand it 100%, even though I feel like you do have the gift of explanation, explain it eloquently. Once they look at the chart and be like, listen, they've been up 88% over the past year in this bear market. And with the volume, I think the volume now is 18,500 last 24 hours. Normally it's like $6,000. So if you're doing that with such little volume, and you got, there's going to be such a big use case. I feel like there's going to be a lot of people. I know they want about 100,000 a day, give or take, in volume. Yeah, this could move really, really quickly.
Yeah, we hope so. We hope so. But it's, I get confidence from the fact that if the protocol fundamentally works, then
Randy, your face is frozen. Sorry.
Yeah, it's having a moment. But if the protocol, the efficiency of the protocol will drive the token price, and that is the equation that I'm kind of focused on, basically. If I can make the protocol work as well as it possibly can do, then everything will flow from there.
Awesome. That's really exciting. And so I saw you're also going to Permission 2 keynote in 12th of September. So can you tell us more about what you're keynoting about?
Yeah, sure. So this is the Permissionless conference in Austin, Texas. So after this call, I'm jumping on a flight. I live in just north of Sydney, so I'm jumping on a flight to fly over to Austin. Yeah. And we've been invited there. So the timing's great, right? Because we just launched, 5-6 hours ago, and then we'll be speaking at that conference as the keynote speaker on the Future of Finance stage. And we're really being invited to kind of basically speak about, we are a candidate for DeFi 3.0, like one of the first protocols that can lay claim to that. And what the way it was explained to me was that DeFi 1 was all about kind of DeFi just kind of having a birth and pooled liquidity in AMMs and borrowing and lending, right? We kind of figured out how to do that in a trustless, permissionless, and non-custodial kind of way, right? And then DeFi 2 was how you scale that out, and you have basically you mimicking everything that traditional finance has. So all those kind of derivatives and all those kind of structured instruments and products, we worked out how to bring them over to DeFi and operate it on the blockchain. What DeFi 3.0 is DeFi pulling away from traditional finance. It's doing things that have never been seen before in traditional finance. And the fact that Bumper has been identified as a candidate, an early stage candidate for that, is a testament, I think, to the model that we have. But I would put things like Olympus in that bucket. Perhaps even kind of abracadabra. Doing things which are really, you just don't get in traditional finance.
Randy's back.
Yeah, I know. It's the second time that happened where my Wi-Fi just had to reset it real quick, and then I'm back next week. I know you said you have to jump on a plane. How long do we have you for?
To the end of the hour. And then
okay, copy that.
Perfect.
I'm going back a little bit towards the kind of beginning of the interview. You had mentioned that sometimes you could tell within a week that some of these people won't be able to cut it. Some of these people, like, whether they have families, it's too hard on them. Yeah. I know you've been working on this for years. How much of your life have you given up for this? And at the end of the day, like, how successful does this have to be in order to make it worth it for giving that up?
God, that's a really good question, Randy. Yeah. I've given up a large part of my life, as have all the co-founders and the core team. we've unfortunately we have people who've lost wives due to bumper. We've had people who've lost their partners due to bumper, because when you're working kind of sometimes 100-hour weeks consistently, there is no time apart from eating food and sleeping, right? And you if you do that over sustained periods of time, which these complex problems demand, then everything else just gets kind of put on the side. I haven't really quantified what that value is. I can tell you that my wife has basically had to single parent for the last 3 years, and it's probably time now that we've launched where we can try to get a little bit of that parity back again. I'd like to be able to have dinner in the evening with my kids, and I've not been able to do that for years.
Wow.
So would like to kind of get just a little bit of balance back, and maybe for my wife to be able to kind of have a little bit more time. But yeah, I'm not trying to there's no sob story here. I knew what I was getting into. My co-founders knew what we were getting into. We are grown-up professionals. We understood that this was going to be a Herculean effort that was going to go on for years for us to kind of get this over the line. So, when we did it last night, a few of us burst into tears because it was okay. We did it. We got this thing over the line. Now let's, kind of take a breather and then
Party time.
the next stage. Yeah, exactly. Party in Austin.
Woo. No, we should have an Aussie party. We need some more Australian crypto stuff going.
Yeah, too right.
Let's see.
Jordan, you up next?
Yeah, I had a question, but I've lost it now. It's gone. So you guys started in Australia, or where did you start for Bump?
I was in Australia. My business partner is actually an Aussie, but he was living in London at the time. He subsequently moved over here, so he's kind of moved up. So we kind of just natively were always working with my business partner in a different time zone. All my team, was spread across from South Africa to Europe to South America, North America. So we were natively distributed, and so it was interesting when COVID hit. It was like, this doesn't make any difference to us at all.
That's interesting. You're already there. Yeah,
awesome. We're just kind of on that, which comes with its challenges as well, right? Because we talk, Randy, about how you kind of have really good staff, right? How you maintain a really solid company culture and have care and consideration for your teammates when they're just a little box of graphics on a screen.
Yeah,
is really difficult, and it's saying, and I think a lot of companies have not really figured this out yet. How you get the cohesiveness of a really tightly knit community of a company, and that culture that people feel proud of and belong to, and to do that virtually has been it's really difficult to do.
What are some of the things you've done to get that working? Have you had like some drinking nights together or something? Like
we played around with some of those things. Yeah, so you kind of have a session where just people would just come online and just we'll just chat basically. Maybe talk about a film or a book or that kind of things. But then they become a bit naff after a while. And then we sometimes have some exercise classes. So we have a personal trainer that will come on virtually, and we all kind of will do that and do some yoga and meditation. But I think it just comes down to having a lot of communication. Like we're on calls a lot, and that may mean that the screen is there where people are on. We're all working, but we can all kind of hear each other and talk to each other. And now and again, people just kind of ask a few questions. But it kind of tricks your mind a little bit in that we're all in the same office space.
Yeah, it's like you're there. Yeah, I get you.
Yeah.
When you guys don't have to answer, but there's a lot of people and companies in Silicon Valley that they'll microdose in order to kind of help the creative juices flowing. Is that something tolerated, encouraged, kind of like, I don't want to know about it, whatever gets you through the day? Very curious to hear your thoughts on that.
Hey, look, we're very kind of egalitarian, non-judgmental culture in our business, right? So whatever people, how they conduct their lives is totally up to them. There's no judgment with us at all. I think our only kind of concern is how do we all keep optimal mentally. So whatever people do, we kind of tend not to be too. I don't think it's kind of something where everyone talks about too much. But we all need to kind of let off a little bit of steam now and again, and we all need to kind of find a little bit of kind of balance with that kind of hectic pace. But I think we focus more on things. We have little check-ins with each other. It's we kind of just concentrate on like the really simplistic things. Are you getting enough sleep? Are you getting some decent food inside you? And are you exercising? And I think what I find is like if my team and myself are getting just enough of that, then we can kind of keep our head above water, basically.
Yeah, nice. That's a good answer.
So this is very complex. A lot of the stuff, like you said, you've had Ivy League professors come in and say it's the hardest thing they've ever done. Now, obviously this is an insane protocol, and doing this that I think can be revolutionary, but there's a lot of things that weren't complex that did change the world, like the microchip or pasteurization, stuff like that. And what is some of the simple tech that you were most impressed with? Like, I know this, like I said, it's very tech complex, but what are some of the simple things that, like, wow, I can't believe we can't function without this, or I can't believe this does so much for us and it's very cheap?
That's a really good question, isn't it? Yeah, I mean, what you're talking about, really simple technology that actually is a kind of real game changer. Yeah. So, I mean, I guess things like just kind of like the transistor radio was probably quite a kind of a fairly straightforward invention that had just massive consequences for communication around the planet. I struggle to answer that question because you think about things like, and again, like maybe kind of Morse code and things like that, like really simple things, but just was a game changer, right? In terms of the expansive distance that allowed humanity to communicate with each other. As humanity evolves, this is one thing I kind of bang on about, is that we're on this kind of exponential curve, right? And people don't really get their heads very well around what exponential means, right? But what we're at such a rapid, accelerating pace of technological advancement that 2 or 3 years development now is like 20 years that's just gone past, right?
Yeah.
And so to answer your question, to kind of think about things that are actually quite simplistic that change the game. I don't know if there are many of those anymore. I think we're just kind of in the realm of like exponential complexity, and there's less simple things out there that kind of can compete with that, I think.
I mean, math isn't created, it's discovered. What was the craziest thing you did discover on this bumper journey as far as the math goes?
That's a really good question. I think it's a shame my CTO is not here, because he was the economic designer of it, right? And he was the guy who designed, incidentally, the first, if it was not the first, it was like one of the first algorithmic stablecoin. So,
cool.
and I'm not a mathematician, Sam is someone that I found who I suddenly realized had a phenomenal intellectual capacity for designing these DeFi protocols. And I would have to defer to him. It's a good question, Randy. It's above my pay grade, that one.
Yeah, no, I've remembered the question I want to ask Jonathan was about centralized exchanges have had heaps of trouble over the last few years. And I've heard a ton of direction is moving over to DeFi, to decentralized finance. And so do you see that decentralized finance is going to completely overtake centralized finance, and that your space is only going to grow, and you're like at the very forefront of that? So what do you see the future looking like? Do you think,
I mean, it was an interesting time, wasn't it? Because you had these kind of CeFi titans like Celsius and kind of BlockFi and kind of Voyager, and those guys, when it came to it, because they are humans in the middle of all of that, and humans are innately kind of greedy and capitalistic, and they over leveraged, and the market went the wrong way, and they all kind of got caught with their trousers down, and kind of just got wiped out. Didn't happen with DeFi, just did not happen. And I'm a great believer that code is law, right? You can see with the protocol what the protocol is designed to do. You can see how it's been coded. That is immutable. It can't be changed. Obviously, it can be hacked sometimes. But I think what it gives is it takes away that disintermediation of that kind of greedy human element in the middle, right? And so what you then have is something which is entirely reliable. And I think it was really beautiful that during all that kind of crash with the FTX nightmare and the Terra collapse, that not one DeFi protocol went bankrupt, right?
Yeah.
None of them failed.
Yeah.
Yeah. They were just these rocks. And I'm in contact with various kind of high level VCs. They're all kind of looking at us to kind of pounce. Once they can see that we've launched and the thing can weather storms. It redirected their invest mandate. It was like, okay, that's where we need to be focusing. That's where the bedrock is, and that's where the stability is and the reliability that finance needs. So my personal thesis is that clearly DeFi will scoop up that CeFi world. But as I said at the beginning, that's just the beginning. We're coming for TradFi.
Awesome. Yeah, I think I see the future of traditional finance again destroyed by the crypto industry. Just in general, it's old technology, right? They're running on almost 100-year-old technology. And everything's moving much quicker now, and we've got smart contracts and blockchain and just everything being like on the ledger, and it's actually way more transparent. Like people are like, oh, people use crypto to buy and sell drugs and things. No, that's called US dollars. That's cash. That's where most of the drug trade's happening, right? Like it's fiat, so it's not like it's so much easier to track things on the blockchain and to make things transparent. And I definitely 100% see that's where the future's going. I've got all my money in crypto, like 100% in crypto, pretty much.
Me too.
Randy's the same.
Oh, okay. So that's what I was going to add. Well, I guess I could still ask you this. Like 4 years ago, Kathy Wood had mentioned that saying 1% of everyone's net worth should be at least in Bitcoin. Now, that was several years ago. Now, obviously, all three of us have most, if not all, of our potential ones in crypto. What do you think the average person, not what they should, but how much will they have in their net worth percentage wise in crypto? 5, 10, 20%?
How much should they have?
Well, how much should, because that gets into the financial advice. How much do you think they will have? Like just not by choice, just, oh, hey, because life is going this way, we're going to need X amount in crypto.
Yes. Yeah. Again, really good question, Randy. I suspect at the moment it's really low, isn't it? I think crypto for us is all consuming, but I think for the masses, it's still for a lot of people just this very kind of conceptual, distant thing. I think what you're kind of getting at is that as crypto kind of expands, it's just going to touch their lives in more and more kind of ways, isn't it? Basically, and I think PayPal did quite a big move on that to kind of allow that to kind of open up, right? And I think when you kind of get things into kind of ETFs and things like that, I think my father-in-law is even thinking, well, once you get an ETF, then I'll buy the shares, and then I've got, arm's length exposure to crypto. I think the real game changer, controversially, whether you love it or hate it, is CBDCs, and then that is just a tidal wave where just all of a sudden everyone is basically transacting in crypto, and I'm all for CBDCs. I'm not for the kind of spying and supervision capabilities that it has, but I just think DeFi will just suck that up. It's going to go, right, thank you, digital dollar. I'm now going to wrap you and just suck you into DeFi, and now we've just got trillions of dollars of liquidity that we can play with.
Can't wait. I love this game. We'll have so I know we got a couple minutes left. There's somebody, I don't think this is possible, so it says, can this technology or the type of formulas, I don't know if you patent it or not, could it be used with things besides crypto?
Yeah. Ooh. But so we've looked at this and we've modeled this. So what you'd have to do is, let's say you took a kind of Tesla stock, you would need to tokenize it. So you could use something like Mirror, but you'd probably use something like synthetics. So you create a synthetic Tesla stock that's then natively digital, and then you would then pump that into Bumper and Bumper that asset. So 100% tokenized real world assets can be kind of sucked into Bumper for sure.
And is that something you guys are actively working on, or you're just like, we just focus on this, someone else can handle that?
Not we're interested in it. I think the kind of main thing for us is like, okay, so we've just got this cornerstone out the way, right? So we expand that to all the natural things we talked about. So, the big market cap coins, we go for interoperability onto different chains, right? Kind of scoop up that, try to build up that, as I said, that kind of walled garden around Bumper. The next play for us would be to see how we tackle an institutional version of Bumper. So to allow any institution that is regulated that would need to have a KYC, AML filter, and more of these are going to hold crypto on their balance sheet, right? This is all going to start to happen, and to allow them to be able to Bumper their crypto assets. And so that's probably the next, kind of big phase 2 for us that we're talking to VCs about. That's that'll be the play.
Would there be like hedge funds and things like that, like big hedge?
Yeah,
because they would love that. They would love to mitigate the risk, right? They're all about mitigating risk.
100%. I mean, they have to. They've got a fiduciary duty. They have to take a hedge. Yeah, absolutely.
It's awesome.
Yeah, so that'd be the next big move.
Have you guys? Do you have like an in between, like a person? Like, I know you said I don't say dumb it down. You dumbed it down for the VCs. And obviously, you have some of these old school dinosaurs, like in classic finance, that is not going to understand this. Do you guys have a go between? Like, do you guys have a translator to go and explain it to them?
I mean, when we were first pitching this, right, we had one call with a traditional VC in New York, and picture the scene. It was like 16 people around a table, full of analysts and grey-haired men. Right, and we kind of explained it. They were like, "No, we don't quite understand it. We'll come back with a page of questions. Then we need to do kind of 3 months, due diligence on you and all the rest of it." Right. The next call was with a Chinese VC. Stopped us halfway through. Asked us 3 really difficult questions. They'd obviously done their homework. They knew their stuff, and they were like, "We don't need to hear any more of the pitch. We're sending money over now. Just send us a contract. We're done."
That's awesome. Chinese,
so,
you said?
Yeah.
You ever gone to the Japanese markets yet as well?
Yeah, we had some. Yeah, we got some Japanese taken.
They're very forward thinking.
Yeah. So you're kind of dealing with that totally different mentality, right? They were so switched on and intelligent and smart and bold and confident.
What do you say about the USA? Huh? No, just joking.
It wasn't the USA. It was more about that kind of old school VC mindset. It just didn't translate very well to us, to what we were doing. Because we want to move quickly.
I'm very much Mr. America, and that upsets me that like the Americans didn't go and they lost out on it.
Randy, you're a young American.
But so that was just an example. But make no mistake, there are a number of VCs, American VCs, that came in our seed round for sure.
Okay.
I was just pointing out they could have been based anywhere, but it was just that it was the point I was making. There was kind of very old school kind of VC due diligence, or we need to send someone out to look through your books type of thing. It was like, we've closed the round already before that happened.
So the majority of people that did come in were American, you're saying, right?
Not sure about the majority. Probably a good third, I think. Yeah. Hey, well, look,
he's like getting the flag out and stuff.
I mean, I think the most amount of innovation probably comes out of the US, doesn't it?
I think US still has like the major crypto is like 90% in USA still.
Yeah,
it's a huge
and like the biggest AI companies are US as well. So I'm just that's the other thing.
Yeah, sure.
How did you ever use ChatGPT into any of your coding? Be like, hey, can you script this? And
no, we didn't. I think that might be something that might come along. I mean, I studied artificial intelligence at university, right? This was back in the day when it was kind of knowledge-based systems. We're interested to see if the next iteration of Bumper that could be a component for kind of AI. Because I can tell you, and I mean this, like this is a true figure that I will stand by. With Bumper, there's probably only about 100 coders in the world that could do it. Right. So if you're a company and they're so in demand, and like I said before, not necessarily for money, they just want difficult problems. So you can go to someone and they can do it. You offer them a huge amount of money. They're like, yeah, I'm not interested in that. So that was a real challenge for us, right? You're dealing with a very small pool of exceptionally talented DeFi native coders. And if AI can help us to not be so reliant on that small pool, I'm all up for that for sure.
Cool. We're about at the hour. Do you want to fire up one last question, or Johnny got to go?
I'm pretty satisfied, man. I really enjoyed this talk. Like it's made
Yeah,
me
it's a good one.
very much like a long-term holder now of Bump. So I'm gonna have to
Yeah,
just
this
hold
was
it.
a lot of fun. I know you have to bounce.
Yeah,
We
cool.
we should introduce you to the VV team at some point. Let's keep in touch, and
Yeah, for sure, guys.
we'll tell you. I mean, you know a little bit about the Omi token. We'll have you on again when you launch Omi Bumper Domi, and we need to get
Sounds
you
good.
back to New York. We need to do a couple things with you. It'll be a lot of fun. I promise. Promise, it's gonna be worth the time.
That sounds great. And if any of your listeners and viewers are permissionless, we have Bumper has a booth there, so come and say hello and try and catch our speech.
Awesome.
Wicked. Cool.
Randy, you're frozen again. No worries.
Cool. All right, guys.
Thanks, Jonathan.
That was a great session. Take care. Okay.
Take care.
Bye.
Bye. Randy's rugged. All right, I'm out of here, guys. Bye.
I don't. Oh, okay. Okay. Yes, there is no one here. Solely flat foot pictures. Thank you guys for coming by. Thank you guys for joining. This is a fantastic stream. This is absolutely fantastic. I should get Dashy. We should get more Bumper. We should get on that. All right, everyone, please comment, like, and subscribe. Comments are good for the YouTube algorithm. Everyone say goodbye to Dashy. Goodbye, Dashy. I love you guys. Bye. Yeah. Jordan will have to say. Bye, guys. Thanks for joining, MC. We love you. Yeah, Randy.